welcome back to Mortgage Ballers. This is Rich Hanlin, and if you are not sitting down, you might want to sit down right now because, yes, you're looking at her. We are capturing her today, and this is a rare occasion where you get to just be quiet and listen to one of the top originators in the nation, Miss Catherine Barnett. Thank you so much for giving me your time today, for joining me to just let me have. You're a hard person to track down, number one. I send you my calendar and she goes, no, Rich, here's my calendar. Make sure it fits in mine. I love it because you have to get her time because she is always on the go. Welcome, welcome, welcome. I am so excited. By the way, let's get it out of the way. Out of 620 loan originators in 2024, Catherine tied for second with two other people, and that's out of 44 states. Let me tell you, it's no small task. We have some of the best under that platform. And you're looking at it today. If you are looking for someone to help you that's knowledgeable, if you are looking for ideas on how to get more business, if you're trying to understand this industry, today you have one of the best. Just sit back and enjoy this. All right, Catherine, I've got you. And I see a little cage in the background. Who's in the cage back there?
That's my best friend. Well, my husband's my best friend, but
okay.
I had two dogs that did not like me.
Okay.
One of them was a rescue. She was a monster blue nose pit, adorable. She must have been abused by dark-haired women, and I'm a dark-haired woman, and she does not like me unless I'm sitting down. But really, so we got our companion. Come to find out, that dog also took on his traits. So I got me a Frenchie named Wally. Sir Wallace, but we call him Wally, and he's being, I have my brother-in-law babysitting him right now because he had mom attachment disorders, which I love. So he doesn't like to be away from mom.
I like it. Now, a couple of things that people don't realize. I see your husband. Obviously, the two of you are incredible. I think he could lift a house. He is one of the strongest looking people I've ever met. On top of it, you guys seem like you're traveling all the time. How does that work with your all these animals?
I have a great brother-in-law. So he does a lot of the dog sitting, and Wally comes with us. My husband, he can lift a house. He loves to lift. That's his kind of outlet in the gym. And so, but also just the kindest teddy bear and blessing in my life. Between the two of us, we have 8 kids.
Woo! All right.
And so I had a bit of a pivotal year in 2020, as most people did. I was very disconnected to my business. I think we were up to like a team of 12 at some point. Wow. My 100 loans to me seems very minimal in my head, but also a great accomplishment to where I came from. To where I would say, we were consistently closing 400 to 500 loans a year. Prior to COVID, but I had a full team, and what I built my business on wasn't what my business was becoming. And so 2020 was like a very big regroup aha moment. I met my husband, and he had to move to Arizona from Colorado, where my whole business was based off of, for more custody of his kids. He's a great dad, and I don't want to take that away from him. And so after 6 months after meeting a man, I moved to Arizona, where I'd never been before, purchased a home, and here I am. So I went through a few struggles and had to regroup on how do I maintain my business in Colorado and build my business in Arizona and elsewhere? And so it was, I would say 2022, 2023, and 2024 were the toughest years. 2023 being really, really tough on me. Okay. And figuring out where I wanted to be in my career and where I wanted to be in the presence of my clients and who I served. And I realized I didn't want to be big anymore. The most valuable asset for me is time, and time with my husband, time with my kids, time with my grandkids. And I wanted to be able to do a really good job for my clients and still do what I loved. And so that was when I joined you. I joined Xpert late 2023, and I realized I really suck at the details. I suck at the management side of it. And if I could run my business like the entrepreneur I am, run my business how I built it, and pay you guys a nominal fee to do the dirty work that I don't even want to mess with, it was a no-brainer. So I feel like once I was able to get that off my plate at the end of 2023, that building process really started to go. And I would say 2024 for me was just the beginning, because 2025 we're already blowing out the numbers of 2024.
We're seeing that on our side. We're having, since January 1st, we've had record imports. We just, February is our second biggest import month after last September when they kind of lowered the rates for the first time.
Yeah.
Something's going on out there, optimism. And that's usually the slow time of the year. So spring's coming. And so the traditional time is going to start kicking in right now. Depending, well, you're in Arizona, so you got sun year round.
Right.
But some of these other areas, they wait for the springtime. And as soon as that hits, people, the optimism comes, especially if you have kids, you want to get into the schools and all that. You got to make those moves. But here's a great story about Catherine, how I met Catherine. She is in transition. And like a lot of people that transition, from where they're at to Xpert. Sometimes they have to run deals through my name as the broker, because you know our industry is horrible at allowing people to maneuver between the two. But I had all these points, and all of a sudden I wake up one day, I'm like, good Lord, where'd all my points go? And then I start seeing it. Oh, who's this person putting in so many files? I'm like, Catherine, slow down, slow down. But funny thing is UWM gives these reward points. That's what they're for.
Yeah.
I just didn't know who this person was. And boy, she was doing a lot of loans really, really quickly. And it's funny you said something. You have such an incredible expectation for yourself every day that what you would say is slow or regrouping or re-platforming, most people would call a record year in this industry. And that's what's incredible about talking to high performing people, where they've gotten to. And your whole day, what you do is now designed in such a way that what's normal to you is record setting at most places. And that's an incredible, that's like you got these incredible people in the big leagues, that are setting records, and they're just doing the same things that they do, but they get their game to such a level that they only know that output. And so many people really need to re-leverage their time of how they're using it. Because you were telling me some things. I want you to repeat what you were telling me. You do things a lot different than a lot of people that I talk to. But, you said it's all about your customers. It's all about your borrowers, past borrowers. You pay attention. I think I know this answer, but how many people are on your team? How many people do you have working with you?
On my team physically, 2.
Okay.
It's me and my sister.
All right.
Lori has been with me since 2009.
Okay.
She has quit as many times as I fired
Hey,
her
Lori.
times. But we've had a good, I would say, since moving over to Xpert, she hasn't quit and I haven't fired her. So
All
we're doing really well, and she's my ride or die, in the sense of she's the first person to say, hey, let's cut this, or I can take this sacrifice, and so I wouldn't be here without her. And then Annette is a strong point in our family. We moved her more to a contract processor when things were slow, to open herself up to be able to assist some of the other loan officers with Xpert, and she's been helping a lot of them, especially those that are onboarding. And so, so I would technically say it would be my sister and I, but also Annette is a huge contributor to our team, as well as I have another processing company that we rely on as well.
Okay. And you take advantage of also, because Xpert has some recruiting and stuff like that. I mean, a lot of people probably ask you where you're at because they want to emulate you. They want to try and figure out how to be like you. And you carry such a huge presence around yourself. I'm a fan on social media. I jump in on all your things to basically, you leave a lot of open-ended questions, and I love jumping in because it's something that stirs people to want to respond. But yet that's not even really, we talked about your advertising budget is a lot different. How you spend your money, how you spend your time, how you leverage your time. Is a lot different because you spend a lot of energy on reminding people that they're important to you. Maybe that might be the right word. Talk about that a little bit. That's pretty incredible what you're doing.
Well, I I hate the way I'm going to put this, and I'm just pretty curt that way. I love realtors, but they're not always the most loyal people.
Sure.
And I learned I'm a student of Todd Duncan. Love Todd Duncan.
I know
used
who
to
that
be a
is.
coach for him. And I learned early on that I'm probably going to outlast your average realtor. We are extremely disposable in this market, and the loyalty is as good as the next shiny object. And so while I try to be of value to my realtor partners that I love, I won't work with anyone less. So the realtor partners that I love, my biggest contribution to them is being able to give back. So my realtors love me as much because I'm also giving them referrals because I leverage my database like no other. I have a large database. I probably have about 10,000 people, about 6,200 active. Those that are participating in my newsletters, those that are participating in my Facebook, those that are engaging with me on an ongoing basis. I have a contract assistant that watches my Facebook for life events. Life events create housing events. So when rates are high, you have sellers who are selling right now. And the only reason why they're usually selling to give up that low rate is because of a life event. And my biggest niche is divorces.
I've heard you talk about that.
Yep. So 50% of all marriages, unfortunately, end in divorce. And this has been my specialty for over 10 years. And while it's a little pro bono, I don't make a ton of money off of it, right? You know, I'm helping people strategize to protect their home ownership goals while going through divorce. And that may not include hiring me. But what I do know is those that keep the house usually sell within 3 years in which they're going to need me. So I just know that I'm going to stay in touch with those clients better than anyone else they run across. So I'll be the first person they think of, as well as the rest of my database. I'm the first person they think of when it comes down to a home loan or their referrals. And that's because I have gentle reminders throughout their house. You know, we have, let's say, a cutting board. Sure, that's fine. But I had a divorce client that she just closed a loan, and we're going to send her a sign that says she believes she could, right? Just something simple, right? When somebody has a baby, I send a personalized nightlight with the baby's name on it, and that thing is going to college with them. So I just had somebody who had a second baby and was like, where did you get that nightlight at? I wanted to get it for the new baby. And I was like, it's already on the way. Don't worry about it. We were already ahead of her. So, so these clients, these are the people that hire me. And so my job is to advise them. My job is to help protect them. My job is to help be a source for their friends, family, and anyone else that they know.
That's incredible. You know, I listened to it, and, you know, I have so many conversations with people, and I have people like, what do you guys do all day? And, you know, they're like, well, I'm a little bit in a funk right now. And I'm like, no, really, what are you doing? Are you doing anything with your time and energy? And everything you said is just staying in front of clients and or conversations, because people understand every conversation you had that you can capture any information and have a personal conversation that you can remember something. And now you can start doing life events with them. And now you can start staying in front. Matter of fact, if you'll allow me to, I'll put the link to your is it a monthly newsletter, weekly newsletter?
I send it out twice a month.
Okay. I mean, I'd be happy to put it in there because people might want to hear your information. Other people sign up for it and things like that. How long have you been in the lending industry?
Oh gosh. I accidentally fell into it when I was 22.
All right.
So
5 years then?
5 years, you know, that's my goal. Oh my gosh. So I think I'm going on my 24th year.
All right.
Yep. By accident, but I love it. You know, this is nothing that I dreamt about being, but took an opportunity because my ex-father-in-law is a realtor in Northern Colorado and wanted to be a realtor, which, God, I'm so glad I didn't do that. I don't care to even look at houses these days. For me, it's all about the people. And so, he's like, no, don't be a realtor. You're never going to see my grandkids. You know, they work too much. Why don't you be a lender? And I was like, okay. And he's like, you're good with numbers. Well, that has nothing to do with the job. But, you know, it took me a little while to learn it. And it was robbing Peter to pay Paul for about 4 years. And then 06, 07, 08, during the toughest times, I started teaching realtors and people how to do good loans.
Okay.
I was never comfortable with the subprime, did not do them. That's why I was probably broke during those years. But I started doing good loans. It was one of the top Chaffa providers for years, until Chaffa kind of changed. I don't do as much Chaffa as I used to, but yeah, that's kind of when I really started hitting the ground running and starting to build teams, manage teams.
No, you've done well with it. You've been on the broker side. I think you've also been an owner, I thought, if I got that right.
Yep.
Have you ever been on the direct lending side?
Yep. I've done it
Okay.
all. So
All right.
I started out as the back alley broker in 02. I'm the want to buy your watch kind of broker, and swore I would never be a broker again because of that. And then I moved into a banking model. I felt like that was a safer place during the turmoil. And
Sure.
then they got bought out and then moved into the correspondent model, kind of helping with a lot of the foreclosures that were going on, and stayed in correspondent for a long time till 2018.
Okay.
And then in 2018, I had a jumbo loan that the company I was working for, I couldn't compete as a retail lender. And listen, I don't sell rate, right? But when you're a half to 0.75% off on rates, I don't care how good you are. It's
Sure.
really difficult to keep the client. And so I could bring the business in and I just couldn't keep the client. And so I had a friend of mine who was like, hey, why don't you get into the broker world? Because I closed a jumbo deal that I made zero money on, that my company ended up making a fortune on, because I couldn't compete with rate. I had to give it as like a branch lead.
Sure.
And at that point, I was like, I can't do this. So I fell under a company temporarily and then decided to go out on my own. They did not provide that original company I fell under, much like Xpert. They did not provide the kind of support that Xpert does, right? And it wasn't correspondent with UWM, so I really struggled there. So I went out on my own and loved being on my own. I run my own show, except for the management and the paperwork is not my forte, and just did not want to deal with that. So when I was pretty frustrated of managing that, and then having the availability to have access to multiple states. That's when Michael had referred you my way, and that's when
Mike Soka.
Yeah.
And you do. I'd like to point out, to get these big numbers, Catherine doesn't shy away from doing. We have 44 states, and she can do a loan in any one of those states because she does do loans in other states.
Mm-hmm.
She can follow her people. She can have conversations with her people. If they're moving, guess what? That life event, where are you going? Guess what? I can help you there too.
Yeah.
I like it. All right. So I want to ask this side of it, because when you talk to a top producer, I think everybody just assumes that all you do is work. And maybe that is the case. But when you're not working, when you finally get to shut it off, and you said you had 8 kids and grandkids, if I heard you right.
Yeah.
Who is Catherine Barnett outside of her daily loan side of Catherine Barnett?
I am. Sometimes I can be a little bit of a homebody.
All right.
I'm like a homebody social butterfly. I don't even know how to explain that. But I love to date my husband. He is my best friend. So we love to date and travel and play, and we do a lot of that. I live to travel. So I work to travel. That is my thing. So as often as I can, I do. Here in Arizona, we still have 2 kids at home.
Okay.
So we're always planning something to do. We run a nomadic axes, which is a mobile axe
That's
throwing
right.
business.
I forgot about that.
That's a little side hustle for us. So we do that. And I am in ministry and Bible study. And then, and enjoy the sun. I love boating when it's nice and hot outside. I love visiting my kids and hanging out with my grandkids. And so when people talk about hobbies, it's really anything that involves people.
Okay.
Yep.
They actually have lakes in Arizona?
We have a big lake. We have Lake Pleasant. I was coming from Colorado, where Colorado has like a pond in comparison to some of the lakes in Arizona. So I'll take the lakes in Arizona.
Where did you live in Colorado?
So I still have a place in northern Colorado, which is Loveland. I raised my kids in Loveland. And I would say 50% of my business is still there. So I maintained my database and my business there. And then 25% of it is in Arizona. The other 25% of it is in Gulf Shores, Alabama, because I have a great
I've seen
referral
that.
source, a great referral source out there. And then everywhere else. So, I'm dabbling in Washington and Florida and you name it, I'm there.
Your name comes up all the time. I get to see the fundings each month and get to
Yep.
see like the top people and things like that. And it's you have some people that accomplish everything in one state, which is, Brandy Stevens is very much like that. She just is very well anchored. Rita Ivy is like that. Amanda Rawls. And then you have other people who basically, they're constantly using all the states, which that's what it was designed for. Because that was the weakness of my last company was I couldn't help anybody that called and said, hey, I really like using you, but I'm doing this. Oh, I can't help you.
Yeah.
So, and plus being on the California side. So I asking you, you said something. I want to make sure I got that right. So how did you meet your husband? He was from Arizona and you were from Colorado? And he taught you to come to Arizona?
He was born and raised here, but he's military.
Oh, okay.
Veteran. And he ended up in northern Colorado. And I met him on Facebook dating when I swore off of online dating. So
yeah, that worked out good. That's a plug for Facebook dating.
Yep. I've been single for about 5 years, and I had a Galentine's right before COVID hit, and somebody was like, hey, you should try Facebook dating. I was like, there's a Facebook dating? And I was like, well, I'm pretty good at Facebook, so let's give it a shot. And so I met him, and we went on our first date. It'll be 5 years on the 20th. And it wasn't a date because you couldn't date because it was COVID. And so we had a nice, very casual. Usually when I meet people, I'm kind of dressed to the nine. I'm kind of, I don't know, not very casual, right? And so I was like, hey, I'm not even trying here. I'm wearing cat yoga pants and an athletic shirt, and I don't even have makeup on, which is not me. And he's like, I don't care. You had me at cat pants. So we just hung out and got to know each other. And then it was just COVID. I call it COVID dating, which is like dog years. It was for every 1 month we were together, it felt like 3. And I still feel that way. I feel like I've been with him forever.
Right.
And so I just knew he was the one. But in between it all, he was in the middle of a custody battle and got more custody. We have 50-50, but that required that he move down here for his kids.
And I love it. And I appreciate you doing that. 2018 was a rough year on my marriage. My wife's been married to a mortgage broker for 35 years coming up September 1st. And believe me, this industry having, the phones never stop, things like that. And, it finally caught up with our relationship. And, we separated for almost a whole year. Thank goodness one of us, meaning me, had to go get some help from some coaches on how to be better. And, and I would challenge anybody to do that because, boy, you talked about the 50% rule. But it's even worse on that second and third, because people just don't stay around longer. Yes, absolutely. And that's a reality. I'm not embarrassed to tell people that I'm human, that, I do have arguments with my kids. My wife and I can have struggles like anybody else. Life is not always perfect, and income in this industry goes like this. And typically, if I'm the broker, I've got just about everything leveraged to hold the company together. And that puts even more stresses because it's like, how do you get in and get out? But I feel very blessed. And, I told her, this will be my last company. I won't start any more companies. This was the culmination of 5 ideas. And I had to build up to this one. Mm-hmm. And I've got the right partners for this one. I'm not doing it myself. And that's one thing I had to transition. I was always doing everything myself and didn't trust anybody. And therefore, I worked myself into the ground and I was the janitor, everything. And, your relationship starts to get pushed further and further and further. So I appreciate your honesty with that because so many people feel, I'm going to be the scarlet letter. It's like, oh, hell no. Like, you are the norm. And believe me, show me any marriage that's perfect because they're not. It takes so much hard work. And the fact that you and your husband are still dating, because so many people forget that side of it. Oh, we're married. And it's like, well, wait, what did you do to fall in love? And therefore, why did you stop doing that? That's the happiest time. Yep. And then these grandkids come along and you fall in love all over again.
Those are the best things. I tell my kids I should have had them first. Grandkids are the best. But I think, this business is unforgiving. in your
Mm-hmm.
marriage. And I divorced in 2015. And as you look back at it, there are some things that I recognize. I mean, I'd love to blame him for all the bad, but I've got to blame him for the good, right? You know, there was good of it. And there were things that I recognize I should have made more of a priority, and myself included. And I think in my new marriage, it's been one of those things with my husband. It for him to be married to the breadwinner, I think that took him a lot of an adjustment.
Sure.
But in the same breath, he's also had to learn what it's like to be married to somebody who's always dabbling into something new. And he always goes to me, he's like, how are you not tired of me? You seem like you just keep starting new things and doing new things. And how are you not tired of me? And I was like, you're my one constant. You're my calm. And I'll just get busy on everywhere else. And so for him and I, it's definitely worked, you know, and it's one of the best things that ever happened to me.
I love it. I love it. I love it.
Yeah.
I talk to people in so many different markets, and it's a little bit harder with you. And Stephanie will be the same way when I interview her because she does stuff in other states. Mike does stuff in other states. Mike Soka.
Love Mike.
You almost have to nowadays, but maybe you don't. But it sure helps that you have options. I talk to people. I just talked to somebody yesterday. Said first-time home buyers, $1 million in Orange County. I just talked to somebody in Michigan this morning, and the first-time home buyers looking at 240 in where she was at in Michigan. But yet, no matter where you're at, we're in that same economy, and they have the same things going on where they have people sitting on a fence and trying to figure out, do I wait? Are the rates going to come back to 5.5? And what is the cost of waiting versus doing it today when there's no competition for the house and the sellers are willing to pay some money? What's your idea on all of that? When you got people sitting in markets just kind of waiting and watching versus you have some people are saying, nope, I'm tired of waiting. I've been doing this 22, 23, 24. I've got to make that next move, prolonging these purchases and or first-time home buyers. What are you seeing out there? What's your conversation with people like that?
Yeah, I definitely take the advisor role in when I'm doing a buyer review. I spent last night with a client for almost 2 hours. It was a buyer consult. We kind of went through the nitty-gritty and the pros and cons of everything. And so the approach that I take is don't force the issue. So there are a lot of gimmicky things out there, and I'm not going to be one who will sell them. I think in my whole entire career, I've done a handful of buy downs. I'm not a huge fan of buy downs, and a lot of people are pushing that and throwing the shiny object out there. But when you look at the other side of a buy down, it kind of defeats the purpose. So what I'm telling clients right now is that your job as a buyer, while we're in a higher rate environment, your job is to get the best darn price on that home. You can always renegotiate an interest rate, but you can never go back and renegotiate your price. So the minute you add a layer of gimmick or a layer of need, you're taking away the best price of the home that you could get. Meaning, if you turn around and ask somebody for $20,000 to help you with your buy down and your closing costs, you could have gotten more if you were to just straight ask for probably $30,000 off. But let's say it was $20,000. That means you could have gotten $20,000 off the price. And a lot of people go, well, it doesn't really help their payment that much. Well, all of it helps your payment, sure, but it's temporary. Right. So you're asking a seller to temporarily fix your problem of being able to afford a home and hope and pray that rates will come down in order for you to refinance. Whereas really look at your budget and where can you pull the money in order to afford this home is most of your folks' problems. Not necessarily the affordability of the home, it's their budget and how they spend their money. I always tell people it's not the money you make, it's the money you spend. And so I try to really work with them on where can we fine tune their budget instead of putting gimmicky things in order for you to afford a home. Because that $20,000 that you have to pay for your closing costs and your buy down is going to cost you $50,000 over 30 years. And so that is the approach I take with a lot of my buyers. I take that same approach when it comes down to new builds right now. Not a huge new builds and they're shiny objects because your competitor is going to be the new build after you own that home and you can't compete. So I just make sure that buyers are aware of, you can sign up for the gimmicky stuff, but just understand you're leveraging your own equity to do so. If you're fine with that, go for it. But just understand, a lot of people are like, well, the seller's paying for it, not a big deal. No, you're still using your equity. Could have gotten cheaper on that house. And that's your job right now, is to get the best deal on the house.
That's definitely a little bit different. Ano was talking to me yesterday, and he's pushing the 2-1 buy downs using the seller. So interesting. Each one, because his concern is there's no competition, but if you wait and the value goes up 5%, 10% in the next 2 to 3 years, now you're paying more for the house, but now there's 40 people in line in front of you. So the best time to buy was yesterday.
Sure.
But yet, and I heard somebody today, they said something different. I hadn't heard this. And they said, well, when you're renting, you're pretty much paying 100% interest because you're getting
Absolutely.
nothing on that.
You're paying somebody's mortgage.
Right. So for you, it's 100% interest because you're not getting the write-off, you're not getting the principal buy down, and it's still somebody else's pillow that you're sleeping on every night. And I thought, well, that's a little bit interesting. I never looked at it that way. When they're complaining they want lower interest, but yet you're pretty much paying 100% interest right now. Definitely a way to look at it. I went through Dave Ramsey's Financial Freedom. I did.
Mhm.
And for most people, 99% of them out there, okay, let's say 95% of America, I think, could use that because I needed to redo debt. I don't carry personal debt anymore. It took me like 5 years, my wife and I, to get out of personal debt. And truly, like if you live like no others, you can live like no others.
Mhm.
And that changed our life as far as our finances, and that went on to our kids. But some people say, oh, and depending on what crowd you're in, they're like, oh, but I've already got all that. But he kind of stops there, and he doesn't help me from that point forward. And I'm like, no, but you don't put him down because he doesn't cater to the 5%. He caters to the 95 because most people, it's a spending issue.
Absolutely.
And I don't do budgets. I do a working budget where I go back 3 months. I want to see your credit cards and all your bank statements. I want to categorize everything that you're spending, and let's look at it and go, dear Lord. I mean, with me, I'm spending $2,000 a month on food. We were eating out all the time, food and supplies, I should say. But between eating out, going to the grocery store, and supplies for the house, I was like, holy Jesus, that's $2,000 off my net income. And was it you that's been posting, or maybe it was Stephanie, I can't remember. Someone was posting, stop telling me that you make 100,000. You don't make 100,000. You bring home 72, and that's really your workable money.
Yeah.
And that's kind of that same principle. Don't tell me this big number because that never touches your hands. But yet, when we do loans, that's what we base the debt ratio on, even though 30% of that, we got to go to a 49.99 maybe. How VA gets to a 79 back-in ratio, I've never understood that.
Yeah.
But
it's good luck meeting the residual. That's always my pain in the butt.
Yeah, just interesting, these different parameters. And then we have the no down payment. Hey, I want everybody to have home ownership. But if the market takes one small step backwards, even 5%, everybody who's 100% and or 3.5% down, all of a sudden they're upside down and they freak out. And I'm like, whoa. You do not buy real estate for a 1-year outlook. Not one person that I've ever had after 5 to 10 years has said that's the worst thing. Values can go down, but you might as well call it renting your own house, but it's your house and it's going to come back. And history has always shown that time and that investment are to your advantage over and over and over.
Absolutely. And I never understood it when I was younger. But my ex-father-in-law had told me, and he's a brilliant guy. I miss my relationship with him for sure. But he had said, you make your money when you buy your home, not when you sell it.
I've heard somebody say that.
And it just took me a little while. And it's been the biggest thing that I preach right now, is that you're going to make your money when you buy your home, not when you sell it. And that's the part we have to be mindful is housing is still a great investment, but you don't need all the gimmicks to get there, right? And if you need all the gimmicks to get there, then you're going to have to take a scale back. We definitely have the Instagram world where everything has to be perfect. And I remember my first house was a reno in 2000. It was a renovation, and the dude carpeted over marbles. It was so poorly done, but we stayed in there for 9 years and rode out the wave of that home, and it wasn't perfect, but it was ours, and it catapulted my value of home ownership. And so while the buy downs are there, I just tell people to pause and be mindful of either fine tune your budget and your spending, or scale back and let this be a stepper. Because I have too many clients that were hoping to refi 2 years ago. I just spoke to one yesterday from another lender, was put in a 2-1 buy down and hasn't been able to refinance. And now their taxes have gone up and they cannot afford this house. So I want to position people for financial success, not temporary relief.
How are you dealing with, is insurance a big deal in Arizona at this point in time? I know California is, I know Florida is, we're hearing some different things, but insurance in 2025, it's almost equivalent to an extra 2% on your rate, depending on where you're at. I mean, it's playing such a huge role.
Well, keep in mind, most of my business is in Colorado. So,
Okay.
And most of my clients being in Colorado. Arizona is a non-weather state. Like, there's not anything happening at any given time. Really, you might have a wind tunnel somewhere, but there's not a dust storm. There's not much going on. But Colorado, I am finding my clients not only getting hit heavy on the taxes, but hit heavy on the insurance. But insurance companies are doing some shady stuff. They're changing the wind and hail deductible so high, like 1% of the value, sometimes 5,000, sometimes 10,000. But the most recent thing we ran into in Colorado, and it happened last week on 2 deals, when the house is older than 10 years old, the roof, sorry, not the house, the roof is older than 10 years old. They are doing a supplemental replacement cost that the underwriter caught instead of a full replacement cost. And we're going to see this happening more often with refis, that when we get an updated policy, they're changing the verbiage in that. So be very careful, because they're changing the verbiage of their roof replacements. And that is where I'm getting hammered in Colorado on, and Alabama and Florida.
We're seeing some stuff like in Georgia, where the insurance is saying, I'm not going to renew unless you put a new roof on.
Yep.
And people are like, what are you talking about? I just bought this house 2 years ago and they had a 10-year warranty. Yeah, in our best estimate, and it's like, or we're just going to drop you. My rental property down in southern Georgia got dropped. Progressive is not going to keep writing it. And I'm like, okay, well, I'm sure I can find somebody, because it's been a good neighborhood down by Warner Robins Air Force Base. But it's been a good rental. But I was kind of surprised on that people are pulling out and doing some different things, but there's going to be some adjustments out there. I'm watching to see if the state steps in, how they're going to handle the fires in California, all different kinds of things. But that has been interesting. My brother lives in Southern California and San Bernardino area, and right along the hills, and they have fires every other year there right now, even though it's not a lot of timber up there. We left Sacramento, California. It seemed like we always had a fire season, winter, spring, summer, fire season. And I mean, it would just be hard to breathe for a while, and no, nothing against California, things I miss about it, but Georgia is a very wet state. You get a lot of rain, and things are very green trees that I didn't realize they were that green. Magnolia trees in California are very dry. I was here and I was like, hey, what's that tree? It's beautiful. Like, that's a magnolia tree. I'm like,
no way.
I've never seen nothing like that.
So I love my magnolias and gardenias.
Absolutely.
Yeah.
All right. Now, I always want to throw this out there because we've talked a couple times, barely, but I'm sitting there drilling you with questions. Is there anything you want to ask me? I'll answer anything that you could ask. And if you don't, you don't. But I always want to make sure this isn't a one-sided street. Is there anything I can answer for you? Anything about my life? Anything about my business ideas? Anything about how much I weighed last year? Whatever you want. Nothing's off the table, because I've literally, people ask me all kinds of crazy stuff all the time. But I hate that I'm just constantly drilling you. At the same point, you might say, gosh, I had him on the phone. I wish I would have asked him this. And maybe there's nothing that you want to know. Maybe there's rumors out there. Who knows? But I always want to make sure I throw that out there.
Yeah. Well, I'm a keep my head down, leave me alone type person. I don't pay attention to the noise. I love competing. So when I know I'm not number one, I'm going to try to be number one the following month. And other than that, I don't pay a lot of attention to the noise.
Okay.
I just stay in my own realm. But I'd love to know a couple of things. A,
All right.
what does the growth potential look like on the East Coast? And B, what is next for Xpert? What are you guys working on right now?
Make sure I clarify. When you say growth, are you talking more of the East Coast states?
Yes.
I can tell you we'll probably end up with every state except for New York and Massachusetts.
That's the one I want. It's Massachusetts.
Everybody wants Massachusetts. We've tried twice, but they
Yeah.
do not like that we have DBAs. They want us to be, and which is weird because I pointed out a lot of people that they've given licenses to that have many DBAs. APMC is one of them. I mean, a lot of variations of APMC.
Yeah.
But yet, what I've found, and I'm basically, you don't like brokers. Because if I'm looking at Nexa, Barrett, and some of the different ones, I'm like, that's interesting. A lot of them don't carry the Massachusetts license. I'm like, did you run the same thing I'm running into? Because we had to pay twice. And I told myself I feel discriminated against because this is not in your licensing. You're literally just making this up on the spot. So it's like, do I get an attorney to fight for that? Because it's a huge VA area, quite honestly, with a couple bases that are there.
Mhm.
But I'm not giving up on that one. I'm hoping with sometimes new administration, that you have a changeover of ideas. I can tell you in Washington, DFI is having a huge changeover right now. And it's interesting standing back because some of these areas are very political, which is kind of interesting towards direct lenders versus brokers, that kind of thing going on. But it's not off the table. Massachusetts would be huge for us. There's a huge need there. And I believe that we could, I mean, it's like, gosh, how many loans do we have to do and how big do we have to get before you say maybe this would be a good thing? I mean,
Right.
I get that we are brand new with a business plan, but the business plan is way beyond what we had even shown people with the growth. Now, I'm going to answer that second one because I'm going to tell you my vision. I don't want another 600 loan originators.
Okay.
It was never by design. I'm not looking to be Nexa and just say I've got 5,000 people. As a originator, lendings to licensees is more important to me because I want everybody in my platform to get something out of it. Changes that you're going to see is we have 5 owners. I approached them earlier in the year and said, look, I've been behind the desk for 3 years. But this is not the best use of my time. So you saw we hired a compliance person. They're taking stuff off of my plate. Alex and Lisa are diving in. They love that side of the business. And I'm like, okay, this is better. Instead of 5 people doing the same thing, let's go. You guys go that direction. Jordan's going to come out of licensing. Jordan works more of the company licensing. Justin's more, he goes through my emails and he's been with me about 6 years. That's my other son. But I'm like, we're going to concentrate on growth. And that's part of what I'm doing with this. My specialty is helping people get more business. As a platform, my goal is to see a 2-to-1 ratio of loans, fundings to licensees. I'll never stop the new people coming on, but we're trying to also raise, instead of just saying, I want to bring this person, it's like, let me pull up their numbers. Okay, this person's done 2 loans in the last 12 months. Tell me why, fight for this person and why we should do this, because maybe we're not the best platform.
Right.
That person is going to hurt here unless they're coming under someone like Catherine who's going to babysit them. So I shouldn't say that. They're going to need assistance. Otherwise, they're going to fail. I don't need more people failing because what happens is a loan officer who's not doing any business brings on another loan officer who brings on another one. And now I have 3 people. No one's getting recruiting. No one's funding loans. And they're taking second jobs. They're not treating this as a full-time job. That's not good for anybody.
Well, and the problem is with loans is that then it becomes a fire sale when they do get one.
Yes.
And then they're leveraging everyone's time because it's been a month since they've originated or 2 months since they've originated.
Or 6 months.
And they forget the process. I've never been a big fan of the part-time hustles. Like it doesn't fit into our world at all. So
I agree with that. It allowed a lot of branch managers to bring people on. But if the branch manager leaves and all 15 of those people are stuck, they're not people we normally would have brought in.
Right.
And now I'm not saying that bad. My goal is to pour into these people. But here's a great example, and this will make sense. I threw it out to 623 people. Let me interview you. Let me get you Let me help promote you. Let me put it on, and I can use everybody's videos to help each other, but also get people to start showing them, let me show you how to get out there and create conversations. Because so many people aren't doing anything. I'm like, I have all the people, I have the team. Well, out of 623, 138 said, I'm sorry, 126 said, hey, I'd like that. Cool. People are like, gosh, why didn't people do it? I said, because it's always the same thing. 20% of the people take you up on it. If I went to my top 100 and did the same thing, 20% of the people would do it. I would tell you that the numbers are, because I went through them, 85% of the business is done by the top 100 loan originators.
Absolutely.
The next 100 do about 10%, and the bottom 299 make up 5%. That's just a fact. And so realistically, I could drop 299 people and say, maybe this platform's not for you. Are you part-time? What's going on? You're obviously not making any money, and that's what you want to do. So, but before I do that, because they're already here. So instead of me going to pile more onto the fire, it's like, I have a series coming out next week. I'm going to walk everybody that wants it. I will show you how to get conversations in a 5-part series. And if you do exactly what I'm showing you to do, you're going to have conversations. Conversations turn into apps, apps turn into loans, loans turn into fundings. And if I can get you to that one, now anything helps the top 100, they have different needs. I need this program. You already have a methodology, but it's like, Rich, I need this. And it's very specific. I want to make sure that I'm getting my top 100 exactly what they need, because I don't want you getting stagnant and going, you know what, there's no growth for me here, because I know for a fact, because I've seen it. If you're doing 10 deals in this market, you'll be doing 40 deals when the rates level out a little bit. Am I ready for that? Is our funding department ready for that? So we just added 2 more funders.
Good, because I was testing that this week. Or last week we were testing that.
Bring it. We've got just got an assistant for our compliance person, so we have full-time compliance pulled off of the admin. Alex and Lisa are running the remaining admin, taking over all licensing and funding, which they already had. I'm pulling out and going 100% growth. And when I say growth, I'm talking about pouring into the people that are here, because by design, we're going to have attrition, people coming, people going. Yeah. But I want to help reward those who already call Xpert Home Lending their platform. I want to know what's the common trait of those bottom 299 and the common trait of the top 25. I already know what it is because of last year. The best of the best. All of you have something in common, which is basically you get out of bed and you're not going to fail. You will fail, but you learn and you maneuver. It's not failure as in, oh, I'm afraid to ever try again. So many people get frozen, and this is, you got to be 10 times your game right now in this economy. You can't be doing the same things you did in 21 or 20, because those were phenomenal years for some people, but those aren't these times right now. So how do you dig deals out, you know?
I always call it failing forward. Every day I want an opportunity to fail.
I agree.
It's just like when working out, right? You don't grow your muscle without bringing it to failure. And so my business is memory muscle. I've come across over 10,000 loans. And so I can answer questions quickly than anyone would ever come. Even my sister is still like, how'd you know that? Or how'd you remember that? I was like, oh, there was this one time in 2003 that I came across, just something stupid like that.
And you draw right upon it.
Yeah, it's all about muscle memory. One time, it was kind of a catapulting thing for my business. And I think it was in 08, 09. I don't know if you remember the company Prospect Mortgage, but they were big in California, and they were big in leveraging with Fannie Mae and Ginnie Mae and getting all of their REOs.
Okay.
And so you remember, Jocko?
I've heard that name, but what?
Yeah, Jocko, he's a public speaker. I forget his last name and I should know it, but this company would always bring
him out?
Yeah, they brought him as like a speaker, right? And he's a no bullshit kind of guy, right? Like he is a no BS guy. Well, they put together this thing. I'll get you his information. He's written a book and everything. I think he's a Marine, like he is, or special forces kind of guy. So they offered it. I was a branch manager at the time, and they offered a paradigm shift.
Willie?
Yep, that's him.
Okay, I know who that is.
They offer, his voice is amazing, but that's another thing left to be desired. So they did a paradigm shift where those that were kind of on the bottom, they were having the branch managers and them all do kind of a coaching segment for 6 weeks, that it was basically either crap or get off the pot type thing.
I
Like,
agree.
to where it was like, you're either going to move your business to the next level or you're just going to get out at that point. And so I joined with one of my loan officers and we ended up winning. And I ended up winning like a thing with like one-on-one coaching with Todd Duncan, which kind of catapulted things. But Jocko was really, he was super strict, and he wanted you to fail. He encouraged you to fail over and over and over again. But he didn't take any excuses.
Mm-hmm.
And so when you realize like the most important person is you, and you have to hold your obligations to yourself, because otherwise you're just letting yourself down. That's the most important relationship. And so I learned a ton from him. He's got a great book, great podcast, but I think if you're ever open to it, and if others are open-minded to it, I've also talked with Michael about trying to do something like a paradigm shift. Like, what the problem is that you get somebody at a higher level, and we have so many things that are in the works that have been in the works for years. I mean, my stuff has been just kind of floating along. My husband, I talked to him and I was like, oh yeah, I've got this little podcast thing with Rich today. And he's like, yeah, what are you going to talk about? I was like, I don't know. I know he's going to ask me, what am I doing in this market that's different than everybody else? And all I can say that I'm doing is just consistency. I'm just consistently executing over and over and over again on the plan that I have set forth. So it's teaching those that are struggling right now to get a small plan, a one-page business plan with 3 executionable items, and just do that over and over and over again. And so if you're ever, if there's anybody that would want some mentorship in that avenue that's with Xpert or wants to join Xpert, I'm all for that. And just trying to get to the next level, because usually it's just turning the knob a little bit. You probably don't have to do a lot. It's just turning the knob a little bit. And I understand my way of doing business is going to be different than other people. Other people market realtors, and I've spent a lifetime marketing realtors. I just do my business a little bit differently now because it's comfortable. That part of that is comfortable for me, where I get my business from. I like that.
Yeah, but I think we're coming out your way, trying to get out there for April, if I remember right. Not necessarily a basketball will be over by then, but we're trying to, it's one of our bigger markets, like a blowout area. But what I see envisioning is trying to bring in some incredible, not just speakers. I'm not looking for a Tony Robbins where he just rah, 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 which he's incredible too, but actionable speakers that says, pull out your book and do 1, do 2, do 3. And if you can't do that, if you're not where you want to be and you're not willing to take some type of direction, then this honestly isn't the business for you. I can't help you if you don't want to help yourself, because what I help this person might not work. So here's 20 different ideas, 20 different speakers that are all getting it done in this market. Here's the best of the best, and they're sharing what they do. Have you watched any of those? Is there anything that Catherine said that possibly resonates with you, or with Hano the other day? Because everybody does it a little bit different. But the one ingredient over and over and over is they wake up and they go. They don't spend a lot. They leverage their time in a direction that leads to business versus leveraging your time all day, leveraging to what's not going to lead to anything because it's woe is me. I've got so much other things on my mind. I get it, man. It's the hardest thing to do is produce when your money's tight, your marriage is tight, your kids are weighing on you, not going to be able to pay your bills. But that's where you find the bottom. And if you can get out of that bottom and work your way back just to break even every month, and then from there you grow, you're learning something that says, I am self-employed, which means I'm going to generate my own business, and you will never want for someone to feed you again because you have figured it out. You learn what your success formula is. I know what mine is, but mine is not everybody's, but I know what Rich Hanlin's is, and I can now repeat it over and over and over, and it becomes very natural to me, and I can do it faster. It's just interesting to me.
I always tell people, find your superpower. If you can find your
I knew it. I knew you were a superhero. That's how it gets done.
That's it. If you can find your superpower, then you can find on how to leverage it. It may or may not be in this business. Like I sit there and go, could I do this job? Like, could I do anything else? And the answer is no. There's nothing else that I feel like I can leverage my superpower the way that I can in mortgage lending. Once you find your superpower, I then distinguish if it's not a hell yes, it's a no.
Okay.
I delegate. I know my hourly worth. That is the first thing.
Once
you define your superpower, you need to know your hourly worth. And I know my hourly worth that if it's not a hell yes, it's a no, I hire it out. So I don't like cleaning my house. I hire it out. I don't like making Amazon returns. I like shopping, but I don't like Amazon returns. I hire it out. So anything that I don't want to do, I hire it out. Now, you can't always do that when maybe your hourly rate is much lower or you're struggling right now. You need to know your BAM. Everybody needs to know their BAM. And my sister and I got very clear on our BAM, and BAM is bare ass minimum. Need to know your BAM. Like, this is what we have to do every single month. What doesn't get measured doesn't get managed,
you're starting to sound like Dan Martell, Buy Back Your Time. Tell me, did you read that book?
No.
Okay, the first 3 chapters have been said. Know your BAM, know your hourly worth so that you can delegate back. And that last part right there, I'm like going, okay, wait a minute here. You're starting to, however you got this is so important. Yes.
Yeah, like Todd Duncan writes Time Traps. It's a little old school, but man, that book changed my life. And that was really where I picked up BAM from another marketing person that I had heard it from. I was like, that's brilliant. And that was years ago. And
we'll have shirts out next week for anybody listening.
Yeah. But that was like, it was just one of those things that when I belong to a networking group. I honestly joined it to get out of my house because I get stuck in this little office and I just stay at work and do a lot of my connections over the phone and Zoom and
throw axes. I know.
Yeah, and throw axes. But my husband was like, you got to get out of the house and really get out there and meet people. And so I joined a B&I group.
I know exactly what B&I is.
In 2008, I did not like it, nor did I get it. But B&I is very relationship based. And back then, in 2008, I treated my life very transactional. Everything was transactions. When's my next transaction? Where's that coming from? Blah, blah, blah. Now, I joined it as a commercial lender because the residential lender was filled. We even did a few commercial loans, and I didn't even do commercial loans, but I do now. And but now I'm in the residential field, and I've been promoted to president for this interim, and I say voluntold, but it really now it suits me because my business is all about relationships. That's the only way we're going to beat AI. Is leveraging AI on the things that take up our time. I work with AI every day. Most of my posts are AI generated where I just kind of put in what I want to say and they make me seem smarter. But the only way we're going to beat AI in this business, and Matt Ishba talks about it all the time, is leveraging AI, but then developing relationships. Yep. This is a contact sport. So the more contacts we make, be it in our industry, outside of our industry, and clients, are the more people at the tip of their tongues speaking my name. So it's all by referral and it's all by relationships. So maintain the relationships with your database, maintain the relationships with anyone you can come across, including Facebook. 60% of my business comes from Facebook.
That's incredible.
Yeah. I don't do anything.
I love it. I love it. I love it. Catherine, I could talk all day. I captured just over an hour and 2 minutes of your time,
I'll take it.
Based on your calendar, I'm assuming you're pushing into other people too, but I
told you I'd block you out.
I have so much follow-up to this conversation. I've been waiting for a long time for this conversation. I just want to say thank you. Number one, for taking the time, but you're just throwing so much honesty and realism. You're not sugarcoating it. You're laying it out there. And I think that's what people relate to the most, is because I can dress up and I can wear a suit and tie and I can act something different to try and be something different to my clients. But my clients, I know exactly who my clients are that I help, and they work hard every day. And, we all have our stuff. I can dress to the nine too when I need to. But at the same point, people want what's between my ears nowadays. And I've just got so comfortable. I get uncomfortable when I start to step outside my lane. A lot of people say, Rich, can I talk to you about this lane, this lane, this lane? I want to do this, this, this. I'm like, whoa, this is my lane right here.
Uh-huh.
My loan officers, they're realtors, and I'm the last one to get paid. And how can I help make their lives better? Because the better, the more successful they are, guess what? My success goes up. And when I changed that avenue, sure, I used to have a 50-50. I supplied leads. I got 50% of the revenue. That wasn't a bad model, but at the same point, I had to have leads all the time. My overhead for a one-person shop was damn near $100,000 a month.
You're hunting.
For 12 people. And yes, you're constantly.
You're hunting, and you can't hunt for too long. You're going to get skinny and die.
Yeah.
To where.
Maybe that's what I need to do. That'll help me with the weight there.
Man, I've been watching that series Alone. I'm like, okay, I can totally do Alone and lose some weight. But no, the hunting, I try to do a mixed model of 20% hunt, 80% farm. Okay. But some folks who are not where I'm at as far as the amount of clients, you have to hunt. But at some point in your career, you've got to make sure you're farming just as well. Otherwise, you're going to always hunt and you're going to tire out, burn out, and not stay in this business. And I know several people like you who spend fortunes on leads. I didn't spend fortunes, but I was so disconnected to my database and my clients because I had so many other people working it, but I spent a lot of money, and when I realized that I can get the same without spending that and having all that pressure. If I have a bad month, I can handle a bad month. If you have a bad month at $100,000 expenditure, you can't handle that.
Nope. Took me right into the 2008 crash. I never went back to that model because I was buying refinance leads, basically is what I was doing. But that's when you talk about farming. So many people do not follow up and understand their database to know if this changes, 20% of these people would be affected in a positive way. Do you know who those people are? Or are you just going to the next person over and over and over? What about all the people that you've helped and they've trusted you? Are you just letting those die by the wayside? Because your competitors will gladly step in and take them.
Here's something scary. 5% of your realtors, only 5%, have a database that they follow up with. Lenders are actually a little bit better, but most of us don't follow up and treasure and love on our database. And so we love on realtors because that's hunting and is going to be able to give us more. But I love loving on my database because at that point, I own the lead. And the person who owns the lead owns the transaction. So I'm a bit of a control freak, but the outcome of me owning the lead is far better than me having a realtor sit here and tell me what I have to do at 11 p.m. at night. The roles are reversed when I'm giving that lead to them, that referral to them, and they're working within my boundaries, right? The relationship becomes very different when you're not taking and you're giving.
I love it. Yeah. I love it. All right.
All right.
I do have another one coming up. Your nemesis, Stephanie, is going to be on. We're going to gather from her as well. Stephanie Gilbert, who was the number one. So you just heard from a number two, the top two people at Xpert Home Lending. I mean, incredible.
Tell her I'm on her heels.
There you go. I'm going to tell her. I'm going to threaten her. No.
I love Stephanie just for my own competitive spirit. So tell her to bring it. I'm on her heels.
All right. I'll have this video. I'll make her watch the video first, and then she can respond. No,
yes, kidding. Please.
I thank you so much for your time. Thank you for just spending some time with me.
You're welcome.
I knew that it was going to be a quality conversation that I just can't get out of the average loan originator that's out there. They need to know who's out there. They need to hear it, see it, touch it, taste it, feel it, to believe that there are people out there that are doing incredible within the same market that they're struggling in. And they just need to just dial it a little bit, like you talk about.
Yeah.
Small changes can lead to huge changes over time.
Yep.
Catherine, thank you so much for your time, for
You're
spending time
welcome.
with me. People are going to really take to this video, and I thank you for taking the time to talk with me today.
You're welcome. Let me know when you get out to AZ.
All right, everybody, this is Mortgage Ballers. My name is Rich Hanlin. That was the Catherine Barnett. And what do we always say when we close it out? Stay thirsty, my friends.